what's going on. This is going to be essentially just higher time frame analysis video. It's December 1st right now. We're going to be reviewing our anticipations off of the monthly chart from last month, essentially, right? 3 weeks ago, we made these 10 anticipations for the month of November. And so, yeah, right, we got our commodities, indices, S&P 500 sectors, right? The sectors of the S&P, kind of the sectors of the economy, right? Whatever. Um, Stocks and crypto. So, right within those, we got our 10 anticipations for the month. So, I was already looking at Bitcoin, so we'll just start with Bitcoin. And, maybe we can just like go backwards from there. So, what was the anticipation for Bitcoin here? Bearish retracement slash reversal during the month of November. So, quick orientation or whatever, right? We're off the monthly chart. So, each one of these candles, right, off of the x axis is a month, right? Either way, this was previous month's candle. This is the month that we're in right now. It's December 1st, right? So like we just opened. Pretty interesting. I mean, kind of, what we're doing so far. Obviously, new anticipation is, trading to and through previous month's low. And like that as its own, essentially, um, liquidity pool or like categorization of a low, right? Like a type of sell side. So yeah, that's kind of fascinating overall. It's fascinating what we see, um, with Bitcoin in general. Definitely not claiming to be some Bitcoin expert or even an expert in the markets in general. This is simply, you know, like the analysis that I use to personally take risk. Um, but it's pretty fascinating because it seems like Bitcoin leads the market. Like Bitcoin honestly kind of leads S&P. Or it has in the past, right? It has in, 2020, 2022, um, in those bearish expansions, and then obviously, the subsequent, runs up higher. Um, but that's kind of where my eyes at, right? Seeing like November's price action here off of the monthly chart, we traded to and through anticipated level, right? I would say this is that reversal, right? We're looking for that bearish retracement slash reversal. So like what would be a retracement? What would be a reversal? I mean, we were framing it off of this, this low here, right? And so we could have just like retraced and still been bearish, but we traded to and through that level. And so for me, that is that like essentially classification, even here off of the monthly, dude, but you drop down into the weekly, definitely reversal, right? So pretty fascinating. I mean, obviously the Judas swing action as well kind of hints at the reversal. Um, but yeah, I think if there was sort of the down and dirty classification, it's trading to and through that low. Simultaneously, potentially even, returning into the discount market intra-year, right? Here's that open, roughly give or take, off of the weekly chart here. Most likely this is calibrated though, that like this is probably the real open. Doesn't really matter if that even makes sense. Um, but either way, understanding like the additional return into the discount market. So I would say like that confluence of returning into the discount market, trading to and through, essentially almost you could even say like previous season's low, right? That summer low, that summer trend up, engagement of the liquidity, right? Where's the institutional pool? It's right here, right off of this run where the stops trailed, right? Boom, and so that narrative within the terrain of the discount market is how I'm framing this as that reversal. Could even still though, off right back off the monthly. This could just be a retracement. It really could too. I mean, right, back to the weekly. I was looking at this fair value gap. Um, right, like retracement could even just like retrace again. Personally, would I want to see it like violate this weekly fair value gap, right? And obviously trade lower. Um, really into the discount as well here. But saying that, say it's like would like to see further bearishness to really lock in that retracement, or excuse me, that reversal off of the monthly framing, right? So this is something I've been thinking about a lot as well, is sort of like intra, like multi-time frame classifications of like the price engine delivery, right? Does the market, I mean, off of the daily, it's reversing, right? But off of the monthly, it's a retracement. So like the way that there can be like the price engine delivery, like chain, like the delivery tree, right? And the rules that it follows, like all of that can be true, like in a fractal nature. And so that's something that I'm really thinking about and appreciating. Um, but either way, yeah, that's that first look, right? So pretty interesting. Anticipating Bitcoin bearishness, saw the Bitcoin bearishness, specifically bearish reversal. So pretty interesting, right? On to stocks, JP Morgan. This was interesting as well. I mean, here off of the monthly, we were looking for that expansion. We saw it intra-month, right? We were looking for the just like basically treating this as that order block, right? Intra-month expansion to and through the high. So we did see the look. Um, but the closure itself was pretty fascinating, I would say. We'll drop down to the lower time frame, but pretty interesting, right? That sort of, high frequency look, if you will. We'll just get straight into the daily. Right. So we essentially, when did we post the video? End of this week here. This week, right? Posted this anticipation 3 weeks ago. It should tell you specific. Well, I know that I posted this on November 7th. But either way, right? Open up, right? That new week opening gap, and then essentially just running higher. Pretty interesting little delivery, little buy program there. Returning to that. Um, well, no, never mind. I was looking at this weekly SIBI, right, which is violated. Now we're kind of in that consolidation, but either way, pretty interesting delivery, right? Like weekly open and then literally just runs. So that in of itself was fascinating. Saw the bearish expansion, or excuse me, the bullish expansion. Um, and so that's kind of where it comes into like, okay, when I say bullish expansion, like I didn't even mean, and I'm not even saying this to, like need to, put another gold star on my sheet or whatever. I'm just saying this for like basically like algorithmic classification. Like the anticipation is like the move in price, not necessarily like the closure, right? And so like I would, I guess, sort of like make that point by saying like bullish expansion. Like, okay, what's the anticipation, right? JP Morgan bullish expansion, but like bullish expansion where, right? And so there's the, there's sort of the, at least in my head, there's the understanding like, okay, what's the anticipation? We're gonna run to and through the buy side and engage the buy side. That's why we're anticipating bullish expansion. It's not like, okay, I'm anticipating bullish expansion. Where is price gonna run to? Oh, there's some liquidity. It's like, okay, I think that price is going to engage this liquidity in what fashion? in that bullish expansion. So pretty interesting because we understand that like you can't necessarily like force the price engine to do more than it's going to do, right? You could expand and then reverse. And so we saw the delivery of expansion to anticipated level. Pretty fascinating as its own study. I mean, personally, I love trading um, internal to the range. Like there's really no knowing how far price is going to run past, your like anticipated level. How far is price going to run as far as like external, um, simply just like external range price delivery, right? Interesting though, like not very far. And so that in and of itself is fascinating. Like simply just selling on that day as we engage the anticipation. I didn't even do that, but like that is my ideal exit. If I can exit like anywhere within this, I'm satisfied. I'm not trying to get the high of this at all. I don't even need to exit within this level. But if I am like afforded that opportunity in a trade, then I take it and I'm satisfied. Because we understand that like within expansion, there is eventually a retracement or reversal. And so, that's its own situation. And personally, like with this type of anticipation, this anticipation especially, right? Literally just the confluence of the order block to the high. Like that in and of itself is the run. We don't even know what's going to happen after that. So we could just go back to consolidation. Um, so yeah, man. Either way, pretty interesting where we at now. We're in that consolidation. So consolidation to expansion, really ultimately back to consolidation. This could be the start of another move, but really high resistance situation, to be honest, right? Nonetheless, though, it's interesting how we saw the higher time frame fractal play out. So yeah, pretty interesting overall. Now onto the sectors here. We'll go look at the housing sector, the consumer discretionary sector, and the healthcare sector. So housing, right, where we anticipating bearish retracement slash reversal. So let's go see. I literally haven't even looked at these. Um, Off of the monthly, we did not really see that here, which is fine. Like, whatever. Not even really demanding that within this consolidation, but pretty interesting, right? Like, what did we see in November? We ultimately repriced the SIBI here to a deeper degree. Uh, might have been looking at this off of the 3 day, dude. I don't remember that. I think that's what that SIBI was there. Um, but yeah, pretty interesting. I mean, very choppy, very, very choppy overall. I am just sort of watching this as like a housing indicator. Obviously, it's a lagging indicator, but generally just kind of curious. Uh, what did we say about? Okay, so that's housing. We'll go to healthcare and then we'll go to consumer. Okay, so healthcare bullish expansion. We saw the bullish expansion. Pretty interesting, right? Trading to and through the external, or excuse me, internal range liquidity. So again, another example, just like kind of just low resistance run, right? Same anticipation as JP Morgan ultimately. Like price is going to run to through this level, but we don't know how far past. And so again, right, we just looked at the JP Morgan. It ran like, what was it, like a percent or something? This ran 6% above. So pretty interesting as its own consideration. Like, how do you, I mean, personally, it's questions of adaptive risk management. Um, personally, a classic adaptive risk management situation is like when price runs to and through that level. if you haven't like gotten out of the trade and you're just sitting and you're like in the open profit, right, as prices like in this level or whatever, like repricing, sometimes I'll run an aggressive stop loss and literally like hypothetically in down here whatever in profit in like solid profit, I'll literally just drag stop loss up to this high and essentially demand price like shows like aggression to and through like further liquidity, or just continues to go. And so that in and of itself is personally like kind of a no nonsense little adaptive risk management play. But either way, interesting, right? Two examples here of these kind of looks with the healthcare sector and JP Morgan there. So what did we say about consumer discretionary here? We said bearish retracement slash reversal. So we did see that here off of the monthly. There's that November candle. So pretty interesting trade to and through that low. Go down to the weekly actually. So yeah, man, pretty interesting. I would say this is a consolidation to expansion back to retracement. So we're currently retracing with really ultimately kind of like back into the consolidation, but we're retracing this range, and so that's how I'm like classifying it within the the price engine. But at the same time too, we could just reverse higher, so then we could also be within the the price engine. But either way, interesting there, right? Just kind of getting these these various perspectives on the sectors within the S&P. So yeah, we'll now go look at the indices. Well, okay, we can start with S&P since we've been looking at the sectors here. Pretty interesting. I mean, really had our eye on this weekly fair value gap here. Interesting how it was repriced in November, right? We returned like that was basically the terrain of the week, or excuse me, of the monthly low. So pretty fascinating overall, dude. Pretty interesting. Um, yeah, I mean, not a whole lot to say. Pretty interesting as far as like what we're seeing. Um, Personally, kind of anticipating bearishness on S&P. Doesn't mean we're not going to see it immediately, but I think we could see potentially even just continued engineering of buy side, right? Like potentially we engage buy side a couple more times, reverse into 2026. So that's really where my head's at overall with the indices. Uh, but yeah, it's been interesting kind of how we responded the second half of November here. Uh, it'll be interesting to see what we do in December. It's interesting also kind of considering that, Bitcoin is already going down. So does S&P follow essentially? That's sort of the anticipation here. Um, from a seasonal perspective, not like they're one to one or anything like that, but that is the subtle question. So yeah, we just looked at the S&P chart there onto the futures here, right? Same thing. Same look, right? Same fair value gap, etc. Interesting though, right? Futures down close candle for the day. We were just looking at the ETF there. ETF is going higher. But then the way that like that new week opening gap on the ETF, overall interesting, right? Whatever. Doesn't really matter. But if you're, into collecting that freaking data or that I don't know, whatever that would be, like whatever that like divergence would be or whatever, dude, I don't even know what you would call it, but yeah, but again, pretty interesting November action. Retracement expansion, retracement, kind of market making, right? Like basically like a classic market maker look. Um, Pretty interested in, what happens ultimately today. I mean, today itself has been pretty fascinating. Um, right? Big Asian session, big Sunday Asian session, ultimately kind of acting as the market maker sell side liquidity, or not sell side, buy side liquidity for this potential buy side delivery we're seeing here. Um, Interesting how we're currently kind of making high of day, right? Again, another interesting daily template low of day during that first hour. Very, very fascinating. But yeah, either way, that's just kind of getting down into the lower time frames. But we see all that within this, this essentially consolidation here. It's a consolidation, right? Either way, what were we anticipating? Bearish retracement slash reversal. So like we saw that kind of, and then we saw like we saw retracement. We're seeing retracement back into the range. So we saw that bearish expansion, or excuse me, bearish retracement. We did, right? In both of them. That second half of the month, it's, sort of like retraced back into the consolidation. So interesting situation overall, right? Very interesting that we did see that, and now we're kind of within this high resistance situation here. Everyone's kind of sitting, everyone's kind of, and dude, you can see it in the narrative, you can see it in like social media or whatever, like, in finance media or whatever. Like everyone's like, basically everyone's kind of unsure of what's going on with the market here. And I find that fascinating. It's always interesting to sort of like farm narrative from retail traders. And that's kind of the narrative that I've picked up on, right? And I'm not even saying like, I'm not saying that I subscribe to that. I mean, I do think the market is going lower, but at the same time too, like it's fascinating to hear the reactions and the responses of the herd to that as well. So either way, checked out the indices there. We will finish up with the commodities. So yeah, we were looking at, what were we looking at here? We had wheat, copper, and crude. I did want to look. I was looking at corn and soybeans on the side as well. Uh, so I want to show these because they're just interesting. Uh, but ultimately, right, soybeans here, we saw that follow up, saw that delivery. We're seeing the delivery in the SIBI here. Kind of curious to see what happens this month. I mean, personally, I'm kind of anticipating like essentially like just more of the move that we saw in November, essentially with everything here. But right, did I include? Okay, yeah. So I was, talking about wheat, copper, and oil. Left out corn and soybeans. We just looked at soybeans. Now let's look at corn. Again, same look with corn. Bullish expansion here. Pretty interesting. Um, Really, fascinating. Interesting terrain of the, monthly low. We get that seasonal open there. Consolidation, maybe even retracement, but very fascinating. Very, very fascinating. Intra-week change in the state, right? There's that monthly open as well, give or take, like consequent encroachment of this SIBI here, order block, right? We trade two and three, that, that low resistance run. That was ultimately like the anticipation, just bang. So it's like we do that, we see, technically what we were looking for pan out, and then we go back into consolidation. So it's interesting when we sort of like see the anticipation pan out, like we did in JP Morgan, then like return back into the range. And so simultaneously, like, essentially just as that retracement, like stab at the buy side again. So pretty fascinating overall type of, or just simply an example of the type of situation that could present itself after, consolidation expansion back to the consolidation. We could expand and then reverse almost, right? Like internal to this on the lower time frame. So pretty interesting, man. Also interesting as well how like an expansion could occur so quickly that off of that time frame, it's still a consolidation basically, right? If we're kind of going off of the bodies here, and so that in and of itself is its own question, and even like the how do you classify that within um, that price delivery? So yeah, now we'll just look at the ones that we had our eyes on here, which was wheat, copper, and oil. So yeah, we did see the expansion higher in wheat as well, right? To and through the internal range liquidity. We didn't, trade to and through essentially like summer high. But it is fascinating how we did see like a considerable move, right? Here's that November open dropping below. I mean, very interesting. Like every week, bullish expansion, bullish expansion, bullish expansion. So again, let's just drop down. Very nice order flow. I mean, really, right? There's that weekly open, or where's the weekly? Boom, right? Expansion. Very interesting week here, and then the follow up. Very interesting, very high, or excuse me, very low resistance. But yeah, pretty interesting month here for wheat, in my personal opinion. I've been stocking wheat for a while, and really just kind of trying to observe. Um, Especially right within this month, within this November month here, this seasonal, like very nice retracements, very interesting. I mean, I think sort of the reason that you obviously don't freaking hold, right? What if you were short in this situation? Price opens, like that's the reason you don't hold for the close. That's why you do everything within the day personally. Or if you don't, you simply accept that like you could be on the wrong side of something like this and essentially just, you know, lose a significant portion of your equity. Um, but overall, interesting, man. Very interesting to see that type of situation within November as well, and ultimately within wheat here. Um, yeah, I mean, when you really like, I don't even know if people even understand like what that situation is when you just like point to this, you know, like that's an insane gap. Um, and yeah, dude, something that I can appreciate as far as doing all of our, excuse me, doing all of our risk intraday. Um, but yeah, not a whole lot else to say. Pretty interesting. Basically, I'll be looking at this again next year. Be looking at November wheat. Interesting to collect that data, right? Copper here. Essentially just that bullish expansion in copper. So we did see that November candle very strong, very nice seasonal. It's like these three, wheat, copper, oil, the seasonals for November, very nice. Within the consolidation as well. And so we've seen this very similar, right? First we saw the JP Morgan, then we saw the healthcare. Um, we've ultimately seen it in like all of these as well. But it's ultimately the question of like, okay, we're inside of the consolidation, we're anticipating expansion to and through this level, but we don't know how high past that level it's going. Right. So here with copper, it's going like right just under 2%. I don't know the measurements of copper, but whatever that is, right? Like 8 cents past that high, not a lot. And then sort of like, it just hasn't shown that it really wants to trade higher. And so like that in and of itself is sort of where I would personally drag stop loss, right? Like, but either way, another data point, right? That's really all I'm trying to point out. But that's my perspective, like within the consolidation to expansion framework is like where are the trades that you can frame within the consolidation to expansion? and essentially just trying to get out as high as possible, if long, um, within the consolidate, or excuse me, within the expansion itself, right? Like within the premium of the expansion, when you like look back at the move that transpired and the eventual like retracement or reversal, being able to look back consistently at the exits and seeing that they're like within the premium of the expansion that ended up panning out. So how can you essentially do that consistently? That's like really all I'm looking for. I'm not looking to sell the high as far as my exit there. So it's a fascinating phenomenon as well. Essentially like looking to anticipate the the move that pans out as well, right? Not just the entry but the exit. So pretty fascinating. Here with oil, okay, so what were we saying, right? On the commodities here, we saw that bullish expansion, wheat bullish expansion in copper. Looking for the bearish expansion in oil off of the monthly here. We did see it. Um, I wanted to see the expansion to and through the low, and potentially even, to and through previous month's low as well, that October low, right? Um, Nonetheless, pretty fascinating month, right? Aggressive bearishness ultimately. I mean, right, this is this month. December open, but you know, literally like 4 months, or excuse me, 4 weeks of bearishness. Nice order flow as well. So pretty, honestly kind of curious to see what happens here when we eventually do fill this in, this new week opening gap. Do we continue lower ultimately to and through this like external range, right? And so it's like we can see this move, we can see the bearish expansion off of the monthly. It's literally like one candle, but when you go down into the weekly and the daily, intermonth was, expansion lower, but like framed off of the monthly. It's really just like within this consolidation. And so that kind of brings me back to that question of, or, something that I'm just thinking about myself is like the multi-time frame slash fractal nature of consolidation to expansion to retracement to expansion. For example, right? During that retracement, which would then be anticipated by further expansion on the lower time frame, you could be having like a reversal scenario taking place, or a retracement scenario taking place, or a consolidation to expansion taking place, or like consolidation to expansion to reversal, right? Or consolidation to expansion back to consolidation, and then expansion is reversal, right? Like all these different things could occur, um, in these fractal natures, and that's really where my head's at as far as like the deeper understandings, right? Like we have our anticipations, we have the higher time frame look. How do you essentially, right, refine this to the lower time frame? That's really all we're talking about here with this concept of the price engine specifically, right? But either way, very interesting. I mean, this kind of pops out. I mean, this ultimately is like retracement expansion, right? Within that higher time frame, ultimately consolidation, right? Here with oil, ultimately. Within what we saw that expansion lower, but within the expansion lower, we saw a retracement to expansion, right? Then we saw another retracement to another expansion. So like that in and of itself is the question, right? Like the framing of the narrative or the framing simply of the price engine off of these different time frames and how that breaks down as you go to the lower and lower time frame and how that's all like it ultimately hints at the algorithmic nature of this concept here, and it's simply like the fractal integrity of the multi-time frame analysis. So yeah, dude, I don't want to get all nerd speak or whatever, but That's pretty much all I got. Um, what else, man? Yeah. So just sort of like as a review, we saw the wheat bullish expansion. We saw the copper bullish expansion. We did not see the bearish expansion. We did see the bearish retracement. We did see the bearish retracement. So that in and of itself is like just one anticipation ultimately. So we're like 3 for 4. We did not see the bearish retracement slash reversal in the housing market. So we are 3 for 5. We did see consumer discretionary bearish retracement. 5 for 6. Did see that. Healthcare bullish expansion. 6 for 7. 7 for 8. 8 for 9. Called it 10 anticipations because of these two different markets. So essentially, what was the only one we got? We were basically like 8 for 10, right? 8 for 9. We'll call it 8 for 10 because of, you know, this. Because ultimately, like, even though these are highly correlated, we could see divergence. And that in of itself would be very interesting. But either way, man, that's sort of the situation here. 80% accuracy off of the higher time frame analysis here. Being able to set that solid foundation off of the higher time frame is ultimately what allows us to engage strategically and consistently off of the lower time frame. Engaging off of the higher time frame thesis and like the higher time frame psychological backdrop, personally, that provides so much psychological conviction when I'm actually in risk. Simultaneously, it really allows me to hold for longer and ultimately like almost like expand the trade and expand the perspective instead of getting caught up totally on what's occurring like right now, if that makes sense. Being able to frame in your head where's price going as well. Um, that could potentially provide, right, along with like, back testing of the situation, but that could provide conviction. Um, almost like graduating, but not even graduating because you could just carve out like solid profits with consolidation to expansion, but graduating into holding for the retracement, potentially even like building up the position again during the retracement and then anticipating further expansion. So all of those things personally are essentially like grounded in the higher time frame. So yeah, that's all I got. Thanks for watching. Peace.